Director at Apollo Hospitals. Welcome to the show, ma'am. Let me start off with the healthcare services. The margins have actually stood at around 24.6%. Are you seeing further improvement levers from here on? And what is the outlook looking like?
So, if you look at healthcare services, we came in with a revenue of 3,169 crores. EBITDA margins really healthy at 24.6 and an EBITDA of 781 crores. So I do think that this is a very healthy EBITDA margin. Having said that, we are pushing towards 25%, and we will do this by a combination of case mix as well as operating leverage, as well as, I think we've really got average revenue per patient at 1,72,000, which is a 9% increase. So we will not expect an increase in average revenue per patient, but with cost as a lever, improved utilization, we should be able to get, and larger volumes, we will definitely get improved margins at around 25%.
Interesting, improved margins on that front. If you're talking about the hospital business, when can we see that mid-teens growth that you used to enjoy back then versus the 10 to 11% now?
No, I think that you'll definitely see it. You will probably see it when we open out our new hospitals, because on the current beds, we have around 69% utilization. So we will open out the new beds over the next 1,600 beds, which will happen in the next 14 months. And when those beds come online, you will see the existing growing at 12% and the new slowly adding up to 5%. So it will move to 18% over a period of 3 years.
Okay, so a period of 3 years is what we need to watch out for. Ma'am, what about the occupancy levels when it comes to hospitals? Because that has dipped slightly. We're seeing a number of 69% versus 73%. What's the outlook looking like?
No, I think the dip in occupancy is for two reasons. One is we didn't have the medical cases that came in last year, and that was significantly reduced, even though our surgical case mix grew. The second is, there was a slowdown in Bangladesh patients when you compare it to last year. The third, of course, is that our ALOS is reduced by 6% to 3.14. So we are getting, a lot of improved asset utilization, which will come from the reduction in ALOS.
Okay. So going ahead, when you're talking about the hospitals that open up, that will add to your overall business, in terms of margins and EBITDA. What's the Capex guidance then looking like?
So if you look at total Capex, our plan was to add 4,300 beds, and at a Capex of 8,300 crores, we have a balanced Capex of 5,000 crores. We will be opening out about 1,600 beds in the next 14 months.
So next 14 months become crucial in terms of spends. Let's talk about Apollo HealthCo's EBITDA margins, 4.1% in the second quarter. So what is the path to achieving a double-digit margin trajectory for this vertical segment? And what is the expected timeline in terms of the primary margin drivers over the next 12 to 18 months?
So if you look at Apollo HealthCo, healthy growth of 17%, revenues at 2,661 crores. More importantly, EBITDA grew by 111%. So you had 110 crores of EBITDA. And again, PAT more than grew at 200% to 74 crores. So very healthy growth. And margins on the pharmacy business itself have grown to 7.8%. So at this current level of operation, it is at 7.8%. And we believe that we've added 148 new stores this year, which again won't contribute to margin in the present, but in future, all these additions will start contributing to margins. And you can look at it, getting closer to double digit when the pharmacies mature over a 3 to 4 year period. In addition, with the addition of the supply chain company, which is KeyMed, So you will see an additional improvement in margins.
So additional improvement in margins expected in this second line of business as well. And now let's talk about Apollo Health and Lifestyle. Reported a loss of around 6 crores for the second quarter. What's the projection and roadmap looking like for achieving a PAT break-even for Apollo Health and Lifestyle?
So if you look at, Apollo Health and Lifestyle grew again by 17% to 474 crores of revenue. In that, what was significant was the growth of diagnostics by 36% to 183 crores. I think what Apollo Health and Lifestyle is doing is really redefining its strategy. It is meant for primary care. It has a lot of capital invested, which is actually driving down in terms of margins and profits. So they are looking at how they can restructure the company and move to greater profitability. Definitely, diagnostics is an area of focus. So is the growth of clinics and primary healthcare. It will also be a funnel into the Apollo hospitals and a funnel that is both profitable and adds volume.
Okay. You know, everyone is actually waiting out for ma'am in terms of the timelines and the next steps when it comes to the composite scheme of arrangement involving all the, three businesses. And this is after the recent approvals that have come in. So what is the timeline and the impact the reported financial structure is going to see going forward?
I think 12 months. So far they have got CIC approval, so I think another 12 months.
Okay, so second quarter next year is when you will see this happening. If you could provide us an update on the phased commissioning when you talk about the operationalization of the 1,400 to 1,500 new beds that were planned for FY26. How many have been operationalized in Q2 and what's the target looking like for H2 FY26?
No, so if you look at what we're opening currently, we've already inaugurated Pune, which opened on October 2nd. We have, Athena was also opened. We will open in January, we'll open Belenis, which is a 170-bed hospital in Bangalore. That will be followed by Sonapur in Calcutta, which will open by the end of this year, which hopefully again, that will open in January, February. That's another 250 beds. By March, we should have Gachibowli in Hyderabad opening out. And with this, we are close to 1,600 beds. The beginning of the next year, the big Gurgaon asset will open out. And that again is a bed addition of 450 beds.
All right. So that's the growth guidance, which seems to be strong when everything comes in place. But thank you so much for joining us on the show. Always a pleasure to speak to you.